Well, thank you very much, Frank, for that very kind introduction. And good morning, good afternoon, and good evening to colleagues who have joined all over the world. Let me thank DZ Bank and ONFIF for this wonderful event, the Follow the Sun. And this truly reflects the global nature of sustainability. And thank you for the opportunity for me to share some of the things we do as a World Bank, and especially as a World Bank Treasury, where we are using innovation, we are using our AAA franchise name to connect global savings to our efforts in fighting the devastating effect of the pandemic. So let me start by just describing a little bit of the impact of the pandemic. Look, the World Bank was created after the Second World War. I think in the past 7 decades, the World Bank has helped, over 100 countries in many different crises, be it human, natural, civil war, and but this pandemic is quite different. That for the first time in many decades, we have now seen the steady progress that we have made in reducing poverty has been reversed. One of our research projections suggests that we are now saying by 2021, an additional 110 to 150 million people will have fallen into extreme poverty, and that is certainly a worrying trend. 1.6 billion children are out of school, and although in the United States and in Europe, kids still can go to school virtually using a good Wi-Fi and technology, 1 billion kids in developing countries truly have lost access. So this is really, really devastating. And if we turn to the Latin America region, I think the damage is equally worrying. I think our prediction is the Latin America Caribbean region, excluding Venezuela, economic growth is actually will decline by 7.9% in 2020. And because of the pandemic, as a matter of fact, 6 of the 10 emerging markets and developing economies with the highest COVID-19 deaths per capita globally are in Latin America, including 5 of the region's 6 largest economies. So this is really an unprecedented event. Now, I feel very privileged to be at the World Bank when the pandemic hit, and working with our board, which is representing virtually all the countries in the world as shareholders. The World Bank quickly came up with a $160 billion package to help more than 100 developing and poorer countries to fight the devastating fallout from the human, social, economic damage due to the pandemic. And I'm very happy to say that up to now, of the $160 billion, over 60 billion have been approved and are being dispersed, helping over 300 projects in over 100 countries, helping those countries fighting the effect of the pandemic. Just to give you a couple of examples, in Latin America, we have a project in Argentina that is helping the country to prepare for, pandemic patient isolation and patient care. In Mexico, we provided a loan of $1 billion in support for continued access to finance for small business, because small business has been devastated, and they are really the engine for job creation. In Ecuador, we have a project about $500 million for inclusive and sustainable growth. In Peru, there is a $50 million loan to ramp up investment in human capital. So all of these projects really require funding, and this is where the work that we do at World Bank Treasury is critical, because we provide the nexus between global savings and development finance. And just very simply, the World Bank Treasury, since our first bond under the IBRD name in 1947, we have just crossed the $1 trillion mark. That's the total cumulative bonds that we have issued in global debt capital market, which means that we have risk mitigated and transformed global savings, which otherwise would not flow to developing countries, but they were directed to projects in developing countries. As we have now passed the immediate crisis of the pandemic, the World Bank Group is very focused in helping countries to see how we can focus on supporting countries so their recovery becomes inclusive, resilient, and sustainable. And of course, all the global issues, whether it's inequality, climate change, gender, and others, should be a big part of it. And therefore, I think the sustainability theme is so critical to the global recovery, especially in developing countries. So I'm really happy that we have this opportunity to bring attention to this. As the World Bank Treasury, I think we have been issuing bonds for decades and decades, but it was in the early 2000 that we have noticed that there was a growing voice in using capital market to bring attention, but also bring financing to global issues, including climate change and other issues. And therefore, the World Bank Treasury was very happy in terms of being the first global institution that issued the first green bond in the world. At that time, that was 2008, we worked with a Swedish bank and Swedish investor who were at the forefront of sustainability and climate change. And as Robert introduced, from that point on, it's a small bond of several hundred million Swedish krona, to a market of labeled thematic bonds that has crossed $1 trillion. This really has demonstrated the power of sustainability sales in the sense not only to provide a vehicle, but also to bring awareness, bring global investor to support this global agenda. So the World Bank Treasury is not only about using our name to issue green bonds, sustainable development bond. It is also using our leadership role to make sure there is transparency, global standard, to bring trust, to bring a transparency into the market. So from the green bond label, we have now turned our attention to the much broader SDG bond, so that we can use our bond program to bring awareness, to bring focus to many different issues under the broad theme of sustainability. So maybe I can give you a couple of examples. One is, of course, a green bond, which we help to create. Another is that, I myself was educated through the process. So we were launching a bond addressing global food loss and waste. And through that process, I learned the food loss waste is actually the third largest carbon emitter after energy and transport. And due to the food loss and waste, 20% of fresh water is wasted. So, when we went on roadshow in Japan, highlighting the impact, the devastating impact of food loss and waste, I was very encouraged that we raised a couple of $2 billion, and we had very strong investor reception. Similarly, we have issued bonds addressing gender, addressing ocean pollution, and addressing other SDG issues. So this is really something that we felt that the social bond, sustainable bond, has huge potential in terms of continue to attract and increased attention from global investors. As a matter of fact, I think the ESG inclusion in investment decision has now been mainstreamed we recently did a survey that showed that 85% of investors look at ESG factors as part of the credit risk process, and 91% of investors are sovereign debt managers for ESG information. So let me turn to Latin America a little bit on this. So in Latin America, we have been partnering with countries in the region to raise new funding for development needs and take advantage of investor demand for assets that support sustainability and transparency. For example, recently we worked with Colombia, where the government just received approval from Congress to issue thematic bonds. And we are very excited that we'll work with the government, share our experiences, and hopefully through the thematic bonds channel, the government Colombia can really connect with global savings and raise funds to fight climate change and other sustainability issues. And Robert gave some statistics. So I also have some numbers to share that countries in Latin America have issued about US $7.6 billion in thematic bond issuance in 2020. The vast majority of issuances came from Mexico, Chile, Ecuador, and Guatemala, who issued either green social sustainability labeled bonds and providing investors with detailed information about their activities and positive impact. Now, talking about impact, in addition to the bond issuance, I think what we have done in the World Bank is really through our impact report, whether it's a green bond or our SDG bond impact report, to bring a direct connection between the fund investors given us to the transformation, the global impact that we bring through the projects that we do. Another topic I'd like to quickly mention is really the power of innovation in terms of being able to raise new funding. Here, the World Bank Treasury has been a leader in terms of green bond, thematic bond, the world's first blockchain bond, and we will continue to use our innovation to bring in new investors. One class of bonds that we feel that has huge potential is catastrophe bond, where we can use the power of the bond market to help countries to mitigate the devastating effect of natural disaster. It could be earthquake, hurricane, drought, so on and so forth. So for example, in 2006, Mexico became the first country to utilize a CAT bond. And later on, we have issued a CAT bond for the Pacific Aligned countries, Colombia, Chile, Mexico, and Peru. And last year, we also issued the first CAT bond for the government of the Philippines, so that they can use CAT bond to help them to mitigate the effect of typhoon and earthquake. The good thing about the CAT bond from an investor perspective is that it is a fixed income asset that is uncorrelated with the traditional fixed income asset, and therefore there is a natural demand on the countryside, because many developing countries are already very stretched with their fiscal space. Therefore, when a disaster hits, the country really have no additional means apart from additional lending from the World Bank to have financial resources to take care of its citizens that suffer from the consequences of natural disaster. But with the CAT bond, which is parametric, a payout will be triggered without additional burden on the country. This provides a tremendous new avenue to support the country to fight the effect of climate change. Let me end this section by saying that that innovation continues. Just today, the World Bank is very pleased to announce that we have issued a new bond, and part of the bond's proceeds goes to UNICEF. And that portion of the bond is backed by the future private donation from the many UNICEF supporters. And the other part of the bond is, of course, a World Bank bond, and the whole bond is issued and the world under the IBRD name. We're very excited because this is yet another innovation where we can use the power of global capital market to front load very much needed development resources for UNICEF to help children in many developing countries because they suffer unproportionately during this global pandemic. And we will continue to use the power of capital market in raising more funds under sustainability, helping not only ourselves, but our partners in the world. So let me end by a reflection. Look, this global pandemic yet again showed the power of multilateralism. It is only natural when a disaster hit, and in this time, border is no protection. Every country is affected. The government of every country, including both advanced country and developing country, their priority is really first to serve their own citizens. And therefore, you know, in Europe and in the United States, you have seen unprecedented amount of stimulus in supporting its own domestic economy and its own citizens suffering from the pandemic. But what about many countries who do not have that resources to help themselves? And this is where the World Bank, Inter-American Development Bank in our region, Multilateral Development Bank, the UN system, the IMF, you know, our job is to help countries who cannot, you know, raise finance on their own because they have a very stretched fiscal situation. And I'm very proud to work in a multilateral institution and hopefully through our joint effort, you know, we can raise awareness and really interest more global investors to come supporting development finance. And so with that, Frank and colleagues, I look forward to a very successful Latin America region discussion for this important topic. Thank you very much. Back to you, Frank.